Good morning. Welcome, everybody. I am Jack Markowski. I'm chairman of the board of NAAHL, the National Association of Affordable Housing Lenders. And on behalf of the board of directors, I want to welcome you to our annual policy and practice conference. We think it's going to be a great day of both theory and practice. We're pleased to be presenting this in partnership with the Center for Community Lending, the National Housing Conference, and the Turner Center for Housing Innovation. So thank you all, and thank our co-presenters. The title today is Scaling Innovative Strategies for Affordable Housing. We're going to think about where we are now. We're well past the crash and the recession of 2008 and the following years. We've got a new administration, new leadership in Washington. Clearly, things are evolving across the country, developing. But things have, it's been a very uneven recovery and redevelopment after the crash and recession. Certainly challenges, it's not the same challenges that we had at the recession and the crash and the aftermath, but it's very different in different places across the country. We have surging markets, of course, a lot of attention on that, primarily in the coasts with, that are concerned about the gentrification and displacement. On the other hand, there's vast stretches of the country that still suffer from deterioration, disinvestment, and many homeowners are still underwater in those areas, and they're lagging way behind the national recovery. Where I'm from in Chicago, actually, we've got both. They say Chicago's a combination of Manhattan smashed up against Detroit, and we feel both of those in Chicago. And we're going to talk about both sides of the recovery today and where we're going from here. So we're going to have a chance to reflect on all of this and to discuss and develop strategies for moving ahead. I want to thank everyone who has helped put this together, particularly the Conference Planning Committee, led by John Olson from Goldman Sachs. John, thank you. The NAAHL staff, led by, of course, our esteemed Buzz Roberts with Sarah Spofford and Cherie Sinclair. And our sponsors. Thank to our many sponsors. And there they are, our lead sponsor, PNC, Community Development Bank. Thank you very much, PNC. And to all of our sponsors. Okay, we have a very full agenda today. It's packed with all different discussions talking about the theory overall, the practice and strategies with respect to homeowners, renters, recovering areas. We're going to have Joseph Otting, the new controller of the currency, speaking to us. So it's very full, and all of you are here, which are going to make this a very valuable and rich discussion. I would ask for housekeeping. Those of you that are on panels, we're asking for you to convene 10 minutes ahead of your panel time in the back there to get mic'd up so we can just keep the agenda moving ahead. So welcome again, and I'll introduce you. I'll turn this over to John Olson from Goldman Sachs. John.
Thank you, Jack. Good morning. I'll add a quick welcome to the conference on behalf of the Conference Planning Committee. But it's my pleasure to introduce our keynote speaker this morning. You may remember that at last year's conference in this same room, we celebrated the 40th anniversary of the Community Reinvestment Act. We're delighted to have Lisa Rice here with us today to help us celebrate another anniversary, the 50th anniversary of the Fair Housing Act of 1968. Lisa is the president and CEO of the National Fair Housing Alliance. She assumed her role just 3 months ago, culminating a 25-year career in fair housing that included playing a major role in crafting sections of the Dodd-Frank Act and establishing the Office of Fair Lending within the CFPB. Excuse me. NFHA is dedicated to eliminating all forms of housing discrimination and is the premier fair housing organization in the country. NFHA also serves as the trade association for more than 200 member organizations across the country that work to eliminate barriers in the housing markets. In addition to the wide range of programs it provides, NFHA is also leading an effort to mark the 50th anniversary of the Fair Housing Act, to celebrate the law's accomplishments, and to call for action around the work that remains to be done. Lisa, thank you for joining us today.
Good morning, everyone. Thank you so much for having me. Now, if I can get this figured out. Perfect. Thank you so much for having me and for putting this very important item on your agenda for your national conference. The Fair Housing Act is a law that was passed in the aftermath of the assassination of Dr. Martin Luther King. It is the last of the civil rights triumvirate. We had the Voting Rights Act passed. We had the Equal Employment Civil Rights Act passed. The Fair Housing Act had been languishing in Congress for years. It had been co-written, co-authored by Senator Walter Mondale, a Democrat, and Senator Ed Brooke, a Republican. The Fair Housing Act has always enjoyed a long bipartisan sponsorship and support. That bipartisan duo wrote the Fair Housing Act, which was going nowhere fast, wasn't gonna pass. And then Dr. King was tragically assassinated on April the 4th in 1968, a year that really stands out in terms of great milestones and very tragic moments that our nation endured. But on April the 4th, when Dr. King was assassinated, those of you who were around then, like me, who were small and remember just how tragic a moment that was, how cities across the country erupted in protest. President Johnson wanted to do something to quell the protestations and to try and send a message, particularly to African Americans and other people of color who had been so disenfranchised throughout the history of our nation, that he took civil rights issues serious. Now, there's a reason why the Fair Housing Act was the last civil rights law to pass. And I think it's because housing is so personal. We produced a film that documents the 7 days from Dr. King's assassination to the passage of the Fair Housing Act. It's called 7 Days. You can look it up on our website or you can go to our YouTube page and access it. It was produced for us by our dear friends at Nationwide Insurance Company. They did an amazing job producing this short film that has won awards across the globe. But when you watch that film, you can see how much vitriol there really was and how much disdain there was for a national fair housing law. The mayor in the town from which I hail, Toledo, Ohio, passed a fair housing ordinance in the 1950s, and he was immediately voted out of office. This is not a popular thing to do, but President Johnson felt that it was the right thing to do. He wanted to give the Fair Housing Act as a gift, as an honorarium to the King family, wanted it to be delivered to them on Dr. King's, the day of his homegoing ceremony, which was April the 9th. Because of the recalcitrance in the Congress, wasn't able to get it done until April the 11th. The law was passed then. Why do we need the Fair Housing Act? Because it's not our nation's first fair housing law. In fact, the first Fair Housing Act was passed during Reconstruction in 1866. We also used the 14th Amendment to garner fair housing protections for people. So why do we need another law? Well, the reason civil rights leaders like Dr. King had been pushing for a fair housing ordinance at the national level, a second law, was because they saw the need for a national law that would bring the protection and the enforcement power of the federal government with it. The 1866 law really relies on individuals to be sort of individual attorneys general in order to see that law enacted or carried out. And what civil rights leaders had seen with the passage of the Voting Rights Act, for example, was that when you brought the power of the Department of Justice, the federal government, the FBI, you could get a lot done. In fact, civil rights leaders had seen that very effect played out during Reconstruction when the federal troops came in and helped to provide civil rights protections for people. That is why it was during the Reconstruction era that we saw the first African American members of Congress, U.S. representatives and senators elected to the federal government. When that federal protection was removed in cities across America, we saw their removal replaced with an apartheid system, separate and unequal, that ultimately was sanctioned by our Supreme Courts. So the civil rights leaders knew that we needed a federal law that brought with it the force of the federal protection in order to really see the law enforced. Civil Rights Act of 1866 was passed, of course, in 1866. From 1866 to 1966, the law was used 2 times. When the Federal Fair Housing Act was passed, in the aftermath of Dr. King's assassination, we saw thousands and thousands of cases brought to help protect people's fair housing rights. And the difference in the filing of those cases and expanding equal housing protections was all down to the force of the Department of Justice and the Department of Housing and Urban Development to help advance civil rights protections for people. The second reason we needed the Federal Fair Housing Act was because we needed to address this system of apartheid, separate and unequal, that we had baked into our housing and financial systems. This map is no mystery to you. You've seen this map time and time again, one of the redlining maps that was created by the federal government, the Homeowners Loan Corporation in the 1930s and 1940s, hired real estate professionals to fan out across America in order to develop these redlining maps that highlighted, that color-coded areas in terms of their desirability in 4 different colors: green, blue, yellow, and red. Red being the areas that were determined to be hazardous, hence the term redlining. These were areas where lending that was sponsored or guaranteed by the federal government could not be done. And those red areas were correlated with areas where African Americans or Latinos were living or other ethnic minorities were living. In fact, on the residential survey that was used to generate these residential security maps or the redlining maps, there is a category for percentage Negro. If there's any percentage Negro in the geographical area, it had to be coded red. Didn't matter the economic status of those residents. It didn't matter their ability to pay. It was based on race. Therefore, infusing, baking in, inculcating in this association between race and risk. So we needed this Federal Fair Housing Act, which has a dual purpose, to try and disengorge that alignment, that association between race and risk. It is why the Federal Fair Housing Act has a dual purpose: 1, eliminating all forms of housing discrimination, and 2, affirmatively promoting fair housing, sort of unraveling this quilt of discrimination, this system of separateness and unequalness that we infused into our lending and housing markets. We are more segregated as a society today than we were 100 years ago. I'll say that again. We are more segregated today than we were 100 years ago. We're more segregated today in some states, in some cities, than we were 50 years ago when the Fair Housing Act was passed. Why? Well, again, it was the system of apartheid, the fact that the federal government, state and local governments engaged in policies and practices that promoted housing discrimination and segregation. When my parents were looking to buy a house in the 1960s, my mother wanted to buy a house in a predominantly white community in Ohio, a suburb of Toledo called Sylvania. She contacted a real estate agent, met with the agent, and the agent told her, Mrs. Rice, I am so sorry. You and your husband are very, very nice people. I can tell that. But I cannot even show you a house in Sylvania, Ohio. If I do, not only will my broker fire me, but I will lose my license, and no other real estate agency will hire me. She said, but what I will do is I'll show you areas where we are moving people in your economic bracket. They took my parents to a neighborhood called Parkside Extensions at the corner of Upton and Bancroft in Toledo, Ohio. When we moved into the house, we bought the developer's house. When we moved into the house, we were the only African-American family on the block. By the time I started kindergarten, 4 years later, my entire neighborhood was African-American. Our elementary school went from being predominantly white to being predominantly black in just a four-year time span. Why? Because at the state level, at the local level, at the federal level, and in the private market, we adopted policies and practices that created these separate and unequal societies. And we're still hyper-segregated today. And you can see how even the areas, those red-lined areas, look at how closely they track to the areas that are colored green. The green dots represent African-American, the African-American population in Cleveland. Look at how closely it still tracks today. That's how Cleveland looks today. So this system of segregation is really, really hard. It's been hard for us to dismantle over the years, but we have to. And one of the reasons we have to is because where you live matters in the United States. If you give me your address, I can tell you your credit score. I can tell you how long you're going to live. All I need is your address. I can tell you your propensity for contracting certain diseases. I can tell you how much money you make. I can tell you the chances of you being incarcerated. I can tell you the chances of your children graduating from high school. I can tell you the chances of your children attending college. I can tell you how much money you're going to make in your lifetime. All I need is your address. Why? Because in America, place is inextricably linked to opportunity. This whole system of segregation created sort of communities of haves and have-nots. Segregation made it so easy for banks to say, okay, I'll leave this community and I'll locate in this community. Segregation has driven things like food deserts, health deserts, credit deserts in America. And that is why you can look at a geographical area and you can isolate where the banks are located, where the grocery stores are located, and where they're not, where the health facilities are located and where they're not. On each one of these wheels that we have, each one of the hubs of the wheels, healthy environments, living wage jobs, access to credit, each one of these areas, transportation access, food access. The majority of African Americans in the United States live in a neighborhood where there is no full-service grocery store. African American communities, in African American communities across the country, there are a dearth of banks and lenders. but African American and Latino communities have 2 to 3 times the number of fringe lenders, like payday lenders and check cashers and title lenders, than predominantly white communities. We did a project with Zillow, who mapped where bank branches are located and where fringe financial services are located. And you can see here, this is a map, I think, of Chicago. You can see every red dot represents a fringe lender, and that's laid over a racial composition map for Chicago. The darker the area, the more concentrations of people of color. You can see that those red dots are hyper-concentrated around the dark regions on that map. We did this for 4 cities across the United States, and we see this pattern played out over and over and over again. Now, what is the challenge there? What that means is that people of color disproportionately access credit in the fringe market. People of color, 46% of African Americans, 40% of Latinos, on down the line you can see, are disproportionately accessing credit in the fringe market. Now, why is this a challenge? This is a problem because in America we have a bifurcated financial playing field, bifurcated, a dual credit market. That tan space represents the fringe market. That is where African Americans and Latinos and Native Americans disproportionately access credit. Your payday lenders, your buy here, pay here lenders, check cashers, pawn shops, etc. That blue space represents the traditional sort of financial mainstream market. And again, as I just shared with you, the tan space, those folks target communities of color in terms of where they locate their physical branches. In fact, in one study, the single largest indicator of where a payday lender would locate was racial composition of the neighborhood. Now, if you talk to these fringe lenders, they say, well, we're only stepping into these places because the mainstream banks don't want to service these neighborhoods and don't want to locate in these communities. That's why we're stepping in to fill in the gap. And that has been their mantra, you know, for decades and decades and decades. And a part of that is true, and that's something that we really need to fix and address. Now, why do we need to fix this? Well, when you access credit on that tan side, if you pay your credit on time, never miss a beat, that positive information is not reported to the credit repositories. So if you're accessing credit on that side, you're not getting the benefit, you're not getting any lift in your credit score. In fact, if you access credit on that side of the space, your credit score is going to be deflated. Now, don't pay your bill. Go into collections. The negative information is reported to the credit repositories. Do you see that perverse arrangement there? If you access credit on that tan side from a lender, that does happen, and keep in mind that the overwhelming majority of lenders in that tan space do not report positive data. There are a few that do, like finance creditors. If you pay that finance bill on time, never miss a beat, in some credit scoring algorithms, you're deemed just simply because you accessed credit from that finance creditor. So it's kind of like you're damned if you do and you're damned if you don't. It's one of the reasons why African Americans and Latinos, on average, have a FICO score that is 100 points lower than that of our brothers and sisters. Our algorithms, our credit scoring algorithms, are designed based on the experience of the larger society, and we really haven't built in the experiences of underserved groups into those credit scoring algorithms the way that they're devised. So for example, we know that African Americans and Latinos, African Americans, people of color, who have the same financial profile as our white counterparts, don't have the same experiences. We just did a full application investigation into the auto lending space. We did 8 different matched paired tests. In every situation, our non-white tester had a better financial profile than his or her white counterpart. Higher credit score, made more money, and had a lower DTI in every situation. In 5 of the 8, the white tester got the better deal. Paid less for the car, got a lower interest rate, and paid a lower monthly fee. In fact, in some of the cases, the reason that the white testers got a lower score was because they were given discounts that they didn't qualify for. Veteran discounts, teacher discounts, community service discounts. So if you're a police officer or a firefighter, you get a special discount from the lender. And our white testers didn't meet any of those criteria, but they got the discount anyway. And of course, our non-white testers were never offered those kinds of discounts. So even when the situations are substantially similar, we know that African Americans and Latinos don't get the same deal all of the time. What does that mean? It means that African Americans and Latinos have to shop more, apply for credit at various lenders more frequently. And when you look at data, that is borne out, that when African Americans and Latinos are getting a mortgage loan, they apply to more lenders. When they're getting an auto loan, they apply to more lenders than their white counterparts. What does that mean? When you're applying to more lenders, your credit score goes down. So we really have to readjust and think about the systems and the structures that we've put in place and how they're still impacting underserved communities so that we're leveling the playing field and making sure that things are more accessible in terms of communities that disproportionately have been locked out of access. Okay, I just want to close out with a couple of things that I think we need to focus on that are still sort of presenting systemic issues for us. I talked about the credit scoring issue. Low balance loans. We know that borrowers of color are living in communities where the housing prices are lower valued, so their inability to access low balance loans is a systemic barrier. Acquisition rehab loans. Look, the foreclosure crisis was disproportionately felt in communities of color, and those foreclosed homes were not well maintained, right? Not by the banks or the investors that owned them, not by the servicers that were watching over them. A lot of them sat in a limbo position for many, many years. And so if, in order to access that housing, you need to have an acquisition rehab loan so that you can purchase the home and bring it up to code. But our inability to access those mortgages is really having a crippling effect. REO maintenance and marketing issues, and I know that many of you have been following our litigation in that area. That's still a problem. And then redlining redo for all of the issues, the reasons that I talked about previously. So these are issues that today we still have to address and tackle so that we are creating more affordable housing opportunities, and we're broadening access to credit for underserved markets. Okay, I see I have like 3 minutes left. I don't know if anybody has a question that you'd like to ask, but I'm happy to take any questions for the time that we've got left. Oh, is there a question? I'm sorry. Yes, sir.
Thank you for your presentation. I was particularly intrigued by the data point where you had said that African Americans have lower credit scores than non-minorities. Where's that data from?
If you email me, lrice@nationalfairhousing.org, I'll send you that data. There are a gazillion studies that bear that out. On average, it's about 100 points lower. Any other questions? Thank you all so much for having me. I've really enjoyed being with you this morning. Thank you.